I'm Alex Walworth. Welcome to a discussion with Jim Glassman, author of the new book, Safety Net, The Strategy for De-risking Your Investments in a Time of Turbulence. Jim, thanks for joining me.
Thank you, Alex.
I'm sure a lot of people are wondering right now, where were you with this book in 2008?
Well, good point. I believe that 2008 was not an anomaly, that we will see other terrible things happening in markets, and investors need to protect themselves.
You write that the investing economy has been radically transformed. What changed?
Well, I think that the level of risk has increased. And we've seen in the last decade the kinds of bolt from the blue risks as opposed to financial risks that really we haven't seen before. We haven't seen them grouped in such a way. So, you know, you had 9/11, you had the tremendous decline in tech stocks that happened in 2000. You had the flash crash recently where the stock market dropped 1,000 points in one day. So what I'm telling investors is, here's a strategy where you can protect yourself so that with a little bit of sacrifice on the upside, you can get a lot of protection on the downside.
And one of the ways that you recommend doing that in the book is to buy bonds. Can you talk a little bit about what you recommend and what types of bonds?
Sure. The simple idea in this book is instead of allocating your assets, as they call it, sort of having 80% or 90% or even 100% of your money in the stock market, which is what, again, sort of the conventional wisdom if you're a long-term investor. Instead, shift your allocation so you're closer to 50-50. So you got 50% of your money in stocks, 50% of your money in bonds.
That is not a standard recommendation, is it?
No. And it might be closer to standard for somebody who's quite old and is about to retire, but not for someone who's, let's say, in his or her 30s. And that's what I'm telling people to do. In the bond part of your portfolio, you ought to strive for a return of about 5% in interest from the bonds. Don't trade the bonds. Just hold them to maturity and try to get about 5%. Now, interest rates are quite low today. It's not that easy to get 5%, but you can do it, and I show how to do it in the book. In the stock part of your portfolio, you can take more risks, or what seem to be risks, and I advise people, for example, to buy developing market stock.
You recommend investing in what you call aspiring nations, like Brazil and China. What does that mean, and how would that work?
These are nations where the leadership and the population is absolutely intent on growth. So I think for investors, growth is the key. That's where they ought to be. Yes, they are volatile in the sense that one year, you know, Indian stocks might be up 50%, the next year they may be down 50%. But over the past 10 years, they've done extremely well, and the reason is that India is growing at 8 to 10% a year. The United States is growing at around 2% a year. So where would you rather put your money?
Your book lays out 18 investment rules, the last of which is to have fun. So how does someone have fun with something as serious as investing?
You know, you're talking about something that, frankly, I think is exciting. I mean, when I first discovered Netflix, I was excited by that. You know, who knows what's going to happen going forward, but I just think as an exciting company that you can partake in, that you can be part of, that you can be a partner in, I think you can have fun with investing.
Jim, thanks for being here.
Thank you, Alex.
The book is called Safety Net. I'm Alex Walworth. Thanks for joining me.